Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly Magnificent 7 update, Mag 7 update. This is for the week of Monday, February 23rd, 2026. And this is Microsoft. I like to start here. We've been bottoming out the last few weeks at this significant, roughly 5-year channel bottom, 394.09, can continue to contain selling not only through the first quarter, but through the rest of the year. From here, we can, at some point, make our way back to rising channel resistance, and presently in the 550s, 580s, and climbing. This could be potentially a 3 to 5 month rally, but probably more in the area of 1 to 2 years in the making, above 394.09. Meta's been bottoming out, at least it did so last week at this. This goes back to November. This is like a 3-4 month channel bottom, 4 or 5 month channel bottom at 642.44. Can continue to contain selling through February into March. And yes, I mean, we still have this lower low framework, so you can't get excited about this. But unless we close below 642.44, I do think it is realistic to anticipate 716.50 by the end of March, 785 to 796 by the end of the second quarter or sooner. And as we continue into later year or into 2027, this 904.88 rising channel top in play potentially. Now, this is very stair-step, so I would then get excited above 716.50. I think for the time being, this structure, this 4 or 5 month channel bottom at 642.44 does carry with it 716.50. And that is an area you might actually take profits if you're a 3 to 5 week swing trader. Closing above 716.50, expect within another probably 3 to 5 weeks, 785 to 796. I think stair step to the upside is the best, holding above 642.44. Now, if we do close below 642.44, I'm going to call this a 3 to 5 week sell signal down to 573.45. And this is a significant support level. This channel bottom may well contain selling through the whole entire year. And from here, we can round up to new, well, I don't know about new highs. We can round back up into that 780s, 790s within a half a year of testing. 573.45. So closing below 642.44, you're playing the short side or you're out of the market 3 to 5 week swing traders, expecting 573.45, where 3 to 5 week and 3 to 5 month position holders can play the long side. Let's move on to Google. Google closed just above this rising channel bottom last week, but by a hair. I mean, I really think this deserves another week. You do have last week's high of 316.50. I'm going to put that red line there. This channel bottom is 316.29. In fact, let me type that out. 316.50 is the red line, and I think that is your aggressive upward pivot point. But until then, we can fall away. We had a key reversal high 3 weeks ago, new all-time high. We closed below the previous week's low, and then 2 weeks ago, we closed below the significant channel bottom. Last week, we closed, let's just say, right at it. So I do still think the risk is to the downside. This stock can continue to unwind into the 230s over the next, I'm going to say, 6 months. And so that is the big picture analysis. If, however, we close above 316.50 this week, which would be both above this rising channel bottom and last week's high, then we have an upward pivot point. So if you were short now, I'd keep the stop fairly tight. I mean, I think even a daily settlement above 316.50 is sign enough that you should lighten up on a short position. Certainly if we close the week above 316.50, I see higher trade. I'm going to move on to the next chart here. If we close above 316.50, I just showed it in the last chart. I don't have it included here. Then 349.04, which is a horizontal channel top, likely within 3 to 5 weeks, and probably on to new highs within a couple of months. So 316.50, 316.29 remains a significant pivot point. I put 296.12 in here just for your own reference, that if you are short and we do close below this 296.12 low that was put out in December, we do see a continued falling away as we move into the second and third quarter into the 230s, which I think are in play anyway, holding below a weekly settlement below 316.29. So this is a big pivot point. Below 316.29, we are still on the short side of the market as we move into later year. Closing above 316.50, forget about it. 349.04 right around the corner and likely onto new highs within a couple of months. On to Amazon. Well, we had a big sell signal about a month ago below the 230.69 channel bottom, anticipating the possibility of 180.35 within several months. And a couple of weeks ago, we closed below this descending channel bottom at 202.55. We closed back above that last week. That neutralized this, what I would consider a 3 to 5 week sell signal down to 180.35. So we're no longer expecting 180.35, at least between now and the end of March. I think we're in a more neutral framework, and quite possibly we could make our way back into the 230s, 240s over the next month or two. That becomes clarified, confirmed, if you will, with a settlement this week above last week's high, 211.17. So if we finish Friday out above 211.17, 230s, 240s likely. That could be 3 to 5 weeks, could be a couple of months. 230s, 240s are this rising channel bottom at 230.69 and this newly formed descending channel top at 241.80. This area can absorb buying on a monthly, possibly quarterly basis, and we could fall away. I will say once again, 230.69 to 241.80 is expected with a settlement this week above 211.17. You might say that it's in reach anyway above 202.55. That was a rejection of a significant sell signal that may carry with it upward continuation into the 240s, 230s, 240s anyway between now and the end of April. But closing above 211.17 is a more aggressive buy signal. The 230.69 up to the 241.80 area, likely then within about 3 to 5 weeks, where we could top out on a monthly, possibly quarterly basis. On to Apple. I provide Apple every single week, a detailed 8 to 10 minute video that gives you the breakdown on not only long-term, but near-term and mid-term. But I do give a kind of the broad brushstroke here. 287.02, still a significant 5-year channel top, 6-year channel top that's performed beautifully over the last year and a half. And below it, you must allow this 192.02 and climbing over the next year or less, all right? I do have other structures. I invite you to go to wickedstocks.com to see what our downward pivot point is as we move into March, April. I do outline it pretty well. I don't show it here because people are paying for this information. I'm just not going to give it away under that circumstance. If we do close above 287.02 in the coming weeks, then we've got this 386.29 and climbing as a 1 to 2 year target. Let's move on to Tesla. Now, Tesla I show every single day for free at wickedstocks.com. You're probably already well aware of that. We do have this 416.52 channel bottom. We did close below last week for the first time. That does suggest 321.89 as a 2 to 3 month downside target, and I'm going with that. Now, I would have you watch the daily Tesla report because you're probably well aware there's a descending channel top we're actually following now as an upward pivot point. So, it may come to pass if we close this week above 416.52, that is suitable upward pivot point because that could actually be consistent with that descending channel top. But I don't want to get too deep in the weeds. I just throw this out as a kind of a quick snapshot as a reminder because I offer it every single day on the same channel that you're at right now. Closing above 416.52 at the end of this week, we actually regain our composure to the upside, 473.82 in reach within a month or two. And yes, as we continue into the later year, we just might see this 535.39 6-year channel top where we could place an annual high. But right now, we're below 416.52. And I think over the next 2 or 3 months, 321.89 in play. So if there's any directional bias right now in Tesla, it is to the downside as we move into the second quarter. NVDA, we present this to our paid clientele on a daily basis. As you may recall, we used to have daily NVIDIA analysis on our YouTube channel, like Tesla. Now it's part of the Triple Q, SPY, and NVIDIA. This is broad brushstroke. I'm not going to give it away because we really break it down every single day, a 5 to 10 minute video. But, once again, we've got 173.28 base of support, 195.08 ceiling of resistance as we move through the month of March. And if we trade, or rather close outside of this range, for instance, closing below 173.28, bearish continuation into the 130s within 2 to 3 months. If we close above 195.08, bullish continuation within 2 to 3 months into the 219 to 228 region. These are long-term wave counts that we don't really show the breakdown of, but nonetheless, closing above 195.09 is a go-long strategy into the 210s, 220s. Finally, Palantir, not part of the Mag 7, but we present it anyway. We get a lot of requests for it. This channel bottom at 130.28, sloppy as it's been, can continue to contain selling on a monthly, possibly quarterly basis, especially when you line it up with this 125.41 high from March. February of 25. This narrowing zone able to contain selling through March into April, and above which we can make our way back into the 180s over the next 2 or 3 months. If, however, we close this week below 125.41, also below, of course, this channel bottom, then I think we're setting up for the low to mid 60s within 2 or 3 months. So big pivot region here. We are above it. Odds do favor recovery. And on that count, I will jump to this last chart that if we close this week above 145.87, the high of the low that was put out 2 weeks ago, bar chart analysis suggests upward continuation into this zone of resistance. Former channel bottom, new descending channel top, presently 183.14 to 186.07. I'm going to call that a 1 to 2 month objective, able to contain buying on a monthly, possibly quarterly basis. And I am going to leave it at that for this week's Mag 7 update. You have a great week.